Hi, Tim Bigham back again this week in full summer regalia here, certainly. And the weather in Chicago's hot. And the market a little bit hot here lately. To quote Pink, as I like to with songs, just give me a reason, just a little is enough. So what we saw yesterday in Alcoa on earnings was apparently enough for the market to, buy into earnings season is going to be a surprise to the upside. Certainly tempered expectations, not only on the market generally, but also on Alcoa. A month ago, they were looking for 10 cents on Alcoa. They tooled it down to 6 cents, came out with 7 with some accounting machinations. So they did beat, that's the headline number. I think another headline that I found very interesting yesterday was out of Bloomberg, where we saw analysts up their year-end price target by 11%, yet look for slowing earnings growth going forward. So it's kind of that dichotomy where, remember, earnings are what you pay for. So paying more and getting less, to me, at some point doesn't make a lot of sense. I think the market is at kind of that inflection point. Looking at about 16 on a forward basis on a PE, using the Schiller PE, which goes back 10 years and kind of adjusted for inflation and cycles. We're looking at really the highest level we've seen outside of the late 1920s and the early 2000s, which obviously were not good times to be long stocks. So stocks certainly not cheap at these levels. I still look for a long, dry summer, looking for that 1670 upside level we saw in the S&Ps to kind of be the ceiling, and 1550 be the floor. So I'm looking again for a range-bound environment here going forward. Certain stocks I'm looking at, Amazon is one. We have earnings coming out after expiration next Friday, so I'm looking at buying some really cheap implied volatility for next week, buying the 285 puts. The stock has been up 6 days in a row. We won't go into valuations on Amazon, but as far as 9-day RSI, Bollinger Bands, and so forth, way off the charts overbought here. Options that expire before the earnings are getting sold down to kind of hedge by buying the big boys, buying some other ones, so they'll hedge away that. So I'm jumping in, buying some cheap puts, the 285 puts that expire next week, just looking for a pullback, a one-day down move in Amazon. Same thing with Google here with earnings coming out, using kind of that earnings announcement to backboard any kind of big upside here given the move these stocks have had. So I'm really looking for kind of a slog it out here again. I think stocks are not cheap, but that free money certainly has tempered the downside for the time being. We saw, overnight some more aid for Greece giving a little lift to the markets. And again, Alcoa, which used to be the bellwether, but now really doesn't account for much of anything in the weightings, beating by a penny, although if you look back a month, they would have missed by 3 cents. And I think going forward, that's kind of the game that has been set up here, where earnings expectations have been tooled down over the past 3 or 4 weeks, even though the market is going up. So remember, you're paying more, getting less, and that's really eventually what stocks are all about. So I think you'll probably see some earnings net beats on really reduced expectations. That will maybe be the catalyst for keeping the market at these levels. Hey, earnings are beating, but again, remember, always look at what the price you're paying for things. So until further notice, this is Tim Bigham. As always, keep your position sizes accordingly and your stops in place. Take care.